Hey there, Raina Teo here. Today, I want to show you how I made $1,000 in a single trading day, and how you can do it too. This isn't about luck or secret formulas. It's about having a solid plan and the discipline to follow it. Behind every successful trade are hours of preparation, studying charts, backtesting, and refining a strategy. The $1,000 profit was simply the result of a process I follow every day, built on logic, not emotion. I'll walk you through the exact steps I took, from spotting the trade to taking profit. But first, remember, your mindset is your most important tool. I approach the market calmly, waiting for my setup. No forcing trades, no chasing. Patience is crucial. If my conditions weren't met, I'd walk away. Consistency comes from mastering your process and emotions, not chasing the holy grail. This story is your blueprint for a simple, rule-based approach that works. Ready to see how it's done? Let's dive in. The trade was on EUR/USD, a pair I watch for its clean trends and liquidity. I started with the daily chart clear uptrend, higher highs and lows. That told me to look for buying opportunities, not to fight the trend. On the 4-hour chart, price was pulling back to a key support zone at 1.0850. Previous resistance, now support, plus the 50-period moving average. This confluence made it a high probability area. I zoomed into the 1-hour chart, waiting for a bullish candlestick pattern as confirmation. No guessing, just building a logical case for the trade. My setup uptrend, support zone, moving average, and waiting for a bullish signal. This systematic approach is what separates pros from amateurs. Preparation is everything. After waiting, I got my signal, a bullish engulfing pattern at 1.0850 support. I entered at 1.0860, with a stop loss just below the pattern at 1.0830, risking 30 pips. Before entering, I calculated my position size, risking 1% of my $20,000 account, or $200. My lot size matched my risk and stop loss distance, no random guessing. My profit target: the next resistance at 1.0960, 100 pips away. That's a risk-to-reward ratio of over 1:3. This means I could be wrong more than half the time and still be profitable. The key: know your entry, stop loss, and target before you trade. Risk management is non-negotiable. Every decision was planned in advance. That's how professionals trade. No emotions, just execution. Once in the trade, my job was to manage risk, not micromanage every tick. I set alerts for my stop loss and target, then stepped away. As price moved 30 pips in my favor, I moved my stop to break even. Now it was a risk-free trade. This removed fear and let me focus on the process. The market continued upward with normal pullbacks along the way. I didn't panic or close early. I trusted my plan. Eventually, price hit my target at 1.0960. The result? A $1,000 profit, locked in automatically. The win wasn't about predicting the future. It was about having a plan for every scenario. Managing the trade with discipline was as important as finding the setup. That's how you let profits run. What can you take away from this $1,000 day? First, always trade with the trend. It puts the odds in your favor. Second, look for confluence. Multiple reasons to take a trade, not just one signal. Third, risk management is everything. Define your stop loss and position size before you enter. Never risk more than 1 to 2% of your account on a single trade. Your goal isn't to win every trade, but to stay in the game. Keep a trading journal. Track your trades, your reasons, and your results. This feedback loop accelerates your growth. Focus on the process, not the profits. Discipline and consistency are your real edge. Profits will follow. If you want to learn more, join our community at Trading with Raina. See you there, you.